Hi there, folks. This is Sean Broderick, and I'm here at the New Orleans Investment Conference again. This time I'm talking to Scott Melbye, and he's the Executive Vice President of Uranium Miner UEC. Now, I've been checking these guys out for years. I've been down to their operation down in Texas. They are a low cost, in situ recovery uranium miner, and they've been watching the price of uranium like us. You know, we've been watching that price percolate along for a while. It is getting higher. Scott's going to just give us some insight into the market and how his company will really make the most of it. Scott, could you speak to my subscribers?
Thanks, Sean, and appreciate this opportunity to speak to you all today. I think one of the starting points for a discussion of the uranium price today is the fact that unlike most commodities which are in a very severe 5-year bear market, uranium is actually up 30% in the spot market from the lows of last summer. And I think if we translate that into uranium demand globally, all the reactors that are operating around the world, the 437 reactors and the 67 reactors that are under construction in over 32 countries, are having a profound impact on uranium demand, which we expect will be about 3% year over year for the next 10, 20, 30 years. Now, Fukushima did impact that curve. It reduced it by perhaps 19, 20% in terms of delaying new projects or canceling some outright, like in Germany we have a phase out there. But the remaining, the net growth with everything that's happening in China, China is building a nuclear reactor program as a baseload source of electricity without carbon emissions, like they're suffering from incredible air quality issues in Beijing. This is a commitment of the communist government to build out their power generating industry. They will surpass the U.S. in terms of installed nuclear capacity within the next 10 years. And the uranium requirements for that are already beginning to be fulfilled through a very significant stockpiling program that the Chinese are undertaking. Last year alone, they bought more uranium than the U.S. consumes in a year. So there's a wonderful positive story on the emerging markets, and that growth of 3% a year going forward is quite a contrast to the production side of the industry right now.
Okay, now we know that we are going to see more demand out of China and India. One thing you told me about is, which I did not know before we had this conversation, Russia has promised a lot of uranium to people that it might not be able to actually give them, considering what their current mining situation is. Isn't that right?
Yeah, no, it's an incredibly bullish argument for the price right now, and it's not one that's fully appreciated by a lot of the analysts. And we see that with reactor orders that they've secured in countries like Turkey, Vietnam, South Africa, China, India, and Iran.
With a promise that if you buy this reactor, we will give you all the uranium you need for life, right?
It's an incredible offer, and especially for emerging markets that don't have the access to the resources that Russia will. But the net effect of that is that within 15 years, the Russians will need about 52 million pounds a year annually. Today, they only produce from Siberia and Kazakhstan about 20 million. So the takeaway here is there is an enormous resource war going on around the world today, but it's not between investor-owned utilities in Charlotte, North Carolina, or Chicago. It's the big players like the Chinese, the Indians, and Russians that are going after above-ground inventories, buying them and stockpiling them, and they're investing in equity interests in mines around the world and securing those resources for their programs.
But as they secure those resources, that's uranium that then won't be sold into the global market, which is quite hungry for uranium, right?
Exactly.
One more thing is that your company, UEC, right now is not producing because you saw the price go down. And, you know, even though you could have made money at that, maybe you just decided you would wait for better prices. Could you speak a bit to what kind of prices you are really looking for and how soon you think we'll get there and that kind of thing?
Well, Sean, exactly. And you know, we take a strategy at Uranium Energy Corp, which may be different than other producers take, but we believe it's the best strategy for our shareholders, and that we take an unhedged approach to our forward book, which also in turn means that we have to be very flexible in terms of our production capability. Now, we're fortunate that the ISR, the in situ recovery process, allows us to be much more flexible and scalable to ramp up production and ramp down production. Now, unfortunately, with Fukushima, with the market downturn, we made the decision quite quickly to ramp down our production. But it's not as if we're sitting on our hands in the interim. We've been doing a lot of de-risking in the form of licensing, permitting, and development work to get those operations in South Texas, what we call our South Texas hub and spoke, into production. We probably have the fastest response time to get back into production of anyone in the industry, and we'll benefit from those low capital costs, low operating costs, probably all-in costs in the $30 range, which in the market that we see in the coming years, $40, $50, $60 uranium prices would be conservative, but is something that we see prices in the $40 to $50 range. We're moving back into production at Palangana at that time, using our Hobson processing plant and starting to generate revenue and cash flow again.
So you guys have $13 million in the bank, burning $800,000 a month, but that should carry you through to when you can start production again, get the cash flow in. And how much could you ramp up to?
Yeah,
how much can you ramp up to quickly?
We make the decision to move forward. All the infrastructure and permits and licenses are in place at the Palangana operation. So the decision there would be quite quick and would be only the cost of wellfield drilling and development, which would probably be $1 million capital investment. The big capital advantage we have is that the Hobson processing plant is presently processing small amounts of uranium from Palangana and can ramp up would ramp up instantly in response to feed coming from Palangana. The capacity at that plant is 2 million pounds a year. Palangana on an annual level can probably contribute around 300,000 to 400,000, but that's where we bring in the hub and spoke concept, and we build another satellite at Burke Hollow, another satellite at Goliad, and we feed potentially from as much as 3 different operations into the Hobson plant and get as close to the 2 million pound capacity as possible. And again, it's all market dependent.
Okay. Well, we've all been expecting uranium prices to rise. There are a lot of forces at work right now that should send it higher. There have been stockpiles. There has been enrichment that did really kind of nurse the industry through for a while, but they've really reached the limits of that. And as they reach the limits, we'll start to see these utilities looking around for somewhere to get uranium, and this is one of the companies where they're going to have to look, obviously. Okay. Thanks very much for speaking to my subscribers. Is there anything you'd like to say before we go?
No, I just, again, I think if you've been invested in uranium, I think your patience will be rewarded. If you're taking a second look, I think in terms of all the commodities, we're probably at the most interesting entry point in terms of the commodity cycle. We're already seeing that 30% increase from last year, but we just can't deny that uranium demand is increasing, production is flat or falling, and inventories are becoming more manageable going forward, and hence we're very optimistic about the uranium price going forward.
Okay, great, Scott. Thanks very much for speaking to my subscribers. I'll just add that this is one of the best run uranium plants I've ever been to. It's beautiful. It's like a water treatment plant. They just like suck it out of the ground by putting water through it and actually leave the ground cleaner than like what they found it. So it has a lot less environmental impact, and that's something else to keep in mind as well. So thanks for speaking to my subscribers. You folks stay tuned. I'll have more for you from the New Orleans Investment Conference.
Thanks.